Is it time to buy Bitcoin? We're going to talk about that. Is it time to buy Bitcoin? Listen up. The Fed is printing money at breakneck speed. I just put this video up a few days ago, got a ton of comments on it. I said something in this video. I want to go ahead and play this for you quickly here, and then I'm going to go into the content of this video. Let me go ahead and say this. If you believe in the future of cryptocurrency, if you like to be able to grow your income and grow your wealth by being a part of cutting edge technology, and if you especially love to earn passive streams of cryptocurrency, be sure to subscribe to this channel, hit that thumbs up icon, go down below, subscribe to my Crypto Passive Profits newsletter, and learn how you can start earning passive income with cryptocurrency. Now, I told you on my last video, which is right here, that I was going to go in some of I was going to break down some of the crypto passive income streams and talk about those a little bit. I'm still working on that video. However, this news story that's happened at the end of last week has just really, I just need to talk about it. So we're going to go ahead and go into that now. Although, subscribe to the channel, hit the bell notification icon, and then I'm literally in the middle of working on or finishing up a video with a whole presentation talking about some of my passive cryptocurrency strategies and incomes, but I'm going to go over some of that on a future video, hopefully the next video. Okay, so here we go. Listen to this very quickly, and we're going to talk about what's happening, because what is happening is unprecedented. Most people are not aware of it, and they have no idea how it can influence them in their lives. But I promise you right this moment, America is closer than ever. In fact, the entire world really is closer than ever at creating a situation which hyperinflation will occur. And this has changed even since I made this last video last week. So listen to what I said right here.
Like they are literally running on the risk. I've never seen this, and I thought I might not see it in my lifetime, but they literally are running the risk of creating a hyperinflation scenario that cannot be undone on the US dollar, which is positive for anyone who's holding gold. It's going to maintain your buying power if you're holding gold or maybe even a little bit of silver. By the way, let's take a look at the gold chart.
Okay, so I said that they were going to run the risk of creating hyperinflation. Now, if you don't know what hyperinflation is, you got to first understand inflation, and it's shocking how many people don't understand inflation. So if you fully understand this, bear with me for a moment. Let me explain it to those who may be listening that may not fully understand this, because one thing that I love to do on this channel is help educate people and help them understand the basics, because most people can't I'm going to cover with you some bad news today, but I'm also going to talk to you about opportunities. And it's important that you understand what's going on around you so you can take advantage of these opportunities. You cannot stick your head in the sand and expect somebody else to do for you what you're not willing to do for yourself. There's so many people waiting for the government to send them a check right now to be able to take care of their finances, yet they've not properly taken care of their own finances for many, many years. And unfortunately, the government's always a little too late and always a lot too little. So let's just go real quickly talk about inflation. So if you heard your parents, your grandparents say way back when that the candy bar used to be worth a nickel, it doesn't mean that all of a sudden it doesn't mean that candy bars become more valuable because today they cost 50 cents. It means that today 50 cents will not buy as much as a nickel used to buy way back in the day. I hope you caught that. Back in the day, your nickel, it's not that everybody's like prices always go up, and it's inevitable. And it's true, prices do go up because we're in an economic system called Keynesian economics where inflation has to exist, meaning that our dollars are no longer backed by gold, but that's another story for another time. So inflation always exists. Let me explain this another way. 50 years ago, 100 years ago, an ounce of gold would have almost always bought about the same thing as it will buy today. But back then, an ounce of gold was worth a lot less in US dollar value. So an ounce of gold today, I haven't looked at the gold price today, probably around $1,200 or so. It's up about 5%, but I didn't look at the price. So about $1,200 or so for an ounce of gold, probably. However, 20 years ago, an ounce of gold was about $300. So the question is, did the price go up? Well, the price went up, but the buying power didn't change. About 20 years ago, that $300 to $600 worth of gold, because of the price fluctuated between $300 to $400 back then. I know because someone bought me a gold coin way back when, and I just remember. But the price of gold back then, gold would have bought roughly, an ounce of gold would have bought roughly the same thing that $1,200 would buy now. That's just giving you an idea of inflation. The buying power of gold has been consistent over the past 100 years. The buying power of your dollar has not. Why? because of inflation. So what is hyperinflation? Hyperinflation is, right now, inflation happens really slow, about 2 to 3% a year officially, which means that you don't really feel it. You don't necessarily notice it. But hyperinflation is when the dollar is buying less and less all the time, to the point that like your paycheck all of a sudden isn't enough. And in some parts of the world, like in Germany and even Rome, all great civilizations have crashed most of the time because of economic hyperinflation. There is a deflation scenario where it can crash as well, but most of the time it occurs because of hyperinflation. Meaning like back in the Germany, was it Weimar or whatever, the old German currency way back when, like there's a famous picture of a guy carrying a wheelbarrow full of cash trying to literally buy a loaf of bread. That's the worst case scenario hyperinflation situation. Bitcoin was created because Satoshi understood that there was a risk in the buying power of your dollars going down and you couldn't control it. And there was a fear of hyperinflation. So Bitcoin exists because you can inflate it. So that's important for you to understand. And we'll stop right there. There is a video called Money as Debt. I'm going to put it above. This is my mantra. I talk about money as debt all the time. I tell everybody to watch it. My kids are required to watch it as they get a little bit older. My niece and nephew were required to watch it by my brother. In fact, most kids in my extended family are required to watch it as well. I encourage you that not only do you have your kids watch it or your grandkids watch it, but that you watch it as well. It is Money as Debt. It is a super simple video. And once you understand money as debt, and once you watch that video, what I'm about to discuss with you could scare the hell out of you. So it's important. I'll go ahead and link it above. Go watch the video, Money as Debt. All right, let's get started. So first of all, this is, I saw the news story on this, and I was trying to find some articles, and I couldn't. I want to give a quick shout out. Someone on Facebook who didn't know, already knew about this, sent me a tweet from this guy, Francis. I don't know this guy, Francis Pilat. I guess he runs Bull Bitcoin, which is a way to buy Bitcoin over in Canada's alternative to Coinbase, he claims. All right. However, this guy's news stream is intense. I subscribed. I started following him because his timeline, news, whatever you call it, his little Twitch stream here is freaking awesome. Some of the stuff that he says, and it's phenomenal. So I encourage you to go follow this guy. But here's a tweet from him. He said it here. Reminder, the Federal Reserve has announced the elimination of banking reserve requirements, 10% to 0% on March 26. After Thursday, banks are no longer required to keep any cash reserve to secure your deposits, the debt they owe you. Literally, the only news story I can find on this is over here on Forbes. And right here, it's a long news story that explains everything, but right here, the reserve requirement. The Fed has now decided to pull a third and lesser known lever, and that's the overnight reserve requirement. Simply put, banks are required to hold 10% of their total money in the vaults at the end of each day. The 10% is a requirement chosen based on the statistical probability of how many people might want to pull out their funds at any given time. During a financial crunch, this number may increase to prevent a run on the banks, something we've seen in many countries during a liquidity crunch. Think of lines at ATMs in Venezuela, Hong Kong, and Lebanon, to name a few. Stated on the Fed's website, as announced on March 15, 2020, the board reduced the reserve requirement ratios to 0% effective March 26, 2020. That's this coming Thursday. This action eliminated Fed reserve requirements for all depository institutions, hashtag banks. This news was barely discussed by major media. It's true. You can hardly find, I heard something on it, I think on Fox or MSNBC, I think. I heard one little blurb about it, and that was it. Yet this third lever is perhaps the one most relevant to the average American. If too many people choose to pull out of cash too quickly, the institution may temporarily suspend withdrawals or even become insolvent. That's crazy. What happens next? After all three levers are pulled on Sunday, March 15th, 2020, the markets awaited the opening bell Monday morning. Many were hoping for a profitable first day of trading after the decision, but that was not the case. Futures fell by 5% ahead of trading. The Dow Jones fell nearly 3,000 points, its second worst day decline ever since Black Monday crash of 1987. The market essentially said, not enough stimulus. The next day, the Fed made yet another announcement to provide liquidity to a struggling system. The Fed would conduct an additional $500 billion overnight repo operations. The funny thing is, by the way, about this, is that many people, this is covered extensively in the news, but nobody knows what this means. So it's important for you to understand that overnight banks typically borrow money from each other. But starting last fall, I believe it was, and I mentioned it briefly on this channel, banks, for whatever reason, stopped going to each other. Nobody really knows why this is. I've heard speculation that it's possible that one or several of the big banks are potentially insolvent and the other banking partners know that. Therefore, they don't want to borrow money from someone who may be insolvent. So they went to the Federal Reserve, and the Federal Reserve started lending money directly to the banks to cover their overnight operations. It started out small, like $15 billion a night, and it was only going to be for a couple of days, a week or so, and then it got extended to a month, and then it got raised to $25 billion. Before long, they're at $100 billion, then they're at $125 billion, and out of nowhere, they were supposed to stop this on this month, March. Yeah, they're supposed to stop this now, and then they talked early in the month about we're going to extend it to the end of February, and then they announced this $500 billion overnight repo operations. So this is overnight borrowing between the largest banks in the world or in the U.S. $500 billion, $500 billion. You think about that. That is extraordinary. These multiple shocks to the market within days caused the volatility index to spike. Yada yada. It seemed that our financial system has pulled on all levers of its levers unsuccessfully. So this is crazy. This is absolutely crazy. Basically, usually when the Fed makes a big move like this, the market responds positively. The market is down today almost 5%. That's nuts. That's absolutely nuts. What does this mean? It means that they're willing to print money. They're talking about directly buying into the stock market. I mean, the Federal Reserve is trying to do everything they can. Is this the time to buy Bitcoin? Well, I'm going to tell you in short, I don't know that there has ever been a better time to be buying Bitcoin. Not financial advice, make your own decisions. I recommend if you're going to buy it that you dollar cost average in. And I'm going to give you some more action steps in addition to that. But I talk about how to buy Bitcoin. I'll put that video above right here. You can watch it on how to buy Bitcoin. But I want to give you some specific action steps right now. First things first, if you have cash on hand, I actually don't recommend that you buy Bitcoin. We're in a position where they're talking about the unemployment rate could hit potentially 30%, which, by the way, I said on the last video last week that Steve Mnuchin said unemployment could hit 20%. And I said on that video, go watch it yourself, if they're saying 20%, it could be a lot worse. Now, I don't have to tell you why that's scary, but that is a scary number. Again, I believe that there's opportunity in everything, even among crisis. So the question is be able to look for the opportunity. First things first. I recommend right now, if you have cash on hand, if you have a job, you have money coming in. If you don't have a job, God bless you, hunker down, stop spending money. But if you have cash on hand, I recommend the very first thing that you do is that you go and buy food and water, or at least food. Go buy food, expect to hunker down. With this virus and everything, you don't want to go outside. You don't want to be sick. You don't want to have to be, you definitely need to stay away from people. You need to protect your health. There's a lot of idiots out there that aren't quote unquote social distancing. You see pictures of everybody going to the beaches and whatnot. Listen, you need to protect yourself. It was on the news. There's a girl in Atlanta who's 12 years old who's sick on she's on a ventilator. Her parents are quarantined at home and can't even see her. She's 12 years old, no underlying conditions. You never know how your body's going to react. Don't play Russian roulette with this ridiculous virus running around. And you don't want to be responsible for making anyone else sick, your parents, grandparents, or anyone like that, friends, neighbors. I recommend that you definitely socially distance yourself. If you don't have a job, then that's even worse. If you do have a job, every paycheck you get from here on out is important. There's no guarantee that you will keep that job, and there's no guarantee that you won't get sick and be out of work. So just keep that in mind. So I would right now, I know I'm not telling you to buy Bitcoin right now. If you don't have enough food and drinks to get you through I keep saying drinks, but you should be able to get water from your tap. If you don't have enough food, enough non-perishables, enough items that get you through canned foods, dry goods, that get you through the next month or two, then I recommend that you do that first and foremost, because there's no guarantee, even if you can get to the store, what's going to be there. Because, I mean, I said it 2 weeks ago on this channel, I believe, or maybe it was last week on that video. I talked about the fact that supply chains were going to be breaking down. They already are. I mean, there's so many things that the grocery store is already out of. And before you say it's because everybody's hoarding, my answer to you is, of course they're hoarding. There's a ridiculous amount of uncertainty. And you're not smart for not buying more items. Do you need to buy a year's worth of food? No. Do you need to buy 3 weeks, 4 weeks, or 2 months, maybe 3 months worth of food? That's your call. But you need to buy enough that your family is comfortable and you can eat. That is important. Second of all, I recommend that you pay off debt right away. I'm going to talk to you about cryptocurrency in a minute, but none of that matters if you don't have yourself stable and safe. Pay off any debt that you can if you can pay it off quickly. If you've got debt that you can pay off in the next month or two, I'd pay it off right away. If you got a little, charge card or something, credit card, you can pay it off right away. If not, I wouldn't pay any extra on it. I would just hold tight. Why? Because you might need that cash, especially if you don't have a job. The second thing that I would recommend is that the third thing that I would recommend is that you start looking for cash flow assets. Now, this is where our Crypto Passive Profit strategy comes in and our Crypto Passive Profits newsletter. If you subscribe to that newsletter, I start talking about some of the cash flow assets that I'm currently investing in. And by the way, what I'm investing in are sustainable business models that pay off like a passive cryptocurrency, if you will. And they pay in Bitcoin. We're not talking about some sort of currency that gets inflated away. We're talking about assets that pay off in Bitcoin. However, you can use that in and of itself isn't as much of an asset. But if you go on, once you sign up for the Crypto Passive Profits newsletter, you will get an invitation. I think you get an invitation, the second email that comes to you, where I talk about my 3-phase plan, and I invite you to sign up for our Crypto Passive Profits course. Now that course it's really more of a community of us that are working together. But that course is really all about how to advertise for referrals and affiliates and create kind of a cryptocurrency affiliate business that kicks off both cryptocurrency and US dollars. So it's about creating an income to give you some stability, to give you some leverage. So if you want to earn more cryptocurrency and you want to, earn more US dollars, first thing you need to do is go down below, subscribe to the Crypto Passive Profits newsletter down in the description. Now, when I say cash flow assets, really the best asset you can invest in is probably real estate. The challenge is real estate's expensive, and the prices are most likely going to go down in real estate if I had to make a guess. That's just a guess. But if you have the ability, if you have cash on hand and you have the ability to pick up a rental property, do it right away. Now, the fourth thing that I would recommend is that you dollar cost average in Bitcoin. Now, I like the idea of having cash flow assets that pay me in Bitcoin. But you're not going to start getting, thousands of dollars in Bitcoin. You got to build up those cash flow streams, and it takes a little bit of time to build those up. You want to advertise consistently over time and build those up. But I do recommend that you start dollar cost averaging some Bitcoin right now, specifically if you have large amounts of money. And you're like, you want to start divesting some of it out of US dollars, then I definitely would recommend on dollar cost averaging small amounts of Bitcoin. The fifth thing that I would recommend is gold. Why? Because you want to be able to have something that's going to maintain your dollar values. And let me just go through this a little bit. If you buy, a couple of quick more tips. If you buy food, Bitcoin, gold, even cash flow assets, I would not openly advertise that or talk to people. Please understand that if we end up in an environment where we have 20+% of unemployment, it is possible, typically what happens when you look at neighborhoods that have 20% unemployment or more, is you have very high crime rates. People are going to be looking for money. People are going to be looking for food. People are going to be looking for things they can sell. I would not publicly advertise if you have gold in your house. And by the way, I recommend that you keep it in your house. Because you want to be able to have it where you can sell it very easily. I also recommend if you're going to buy gold, let me back up. Let me talk about food and water. When you buy food and water, you want to put a high emphasis. Of course, go ahead and buy meats. Go ahead and buy things that are cheap. Buy chicken. Buy fresh vegetables. Go ahead and buy those right away because you may not be able to get those later, or you may not be able to get as much of them later. And go ahead and buy them now. Start eating on them now. But at the same time, buy canned chicken, buy Spam, buy canned ham, buy protein that is going to be able to stay for several weeks and not go bad. Buy canned tuna, buy dry beans, and that's going to give you protein, and that's going to be really important to get down the road. Of course, you can buy rice. Heck, you can buy ramen noodles. At least it will be sustenance, and at least it's cheap. So you can buy canned soup. Buy anything you can think of that's going to give you some variety in your diet so you don't get totally bored with it, but at the same time, it's going to give you food to eat. And I'm not kidding when I say that. Every prepper on the planet looked like an idiot a month ago. And by the way, I'm not a prepper. I'm very aware of that mindset. I've read books on prepping, but I have never been one to stock up a lot of food ever, until I saw this coronavirus coming. And I promise you, I was one of the first people on the planet that was not a prepper that started prepping very, very quickly. However, because I have a medical background way in my life, so I was very aware of pandemics. I watched this thing very closely. I knew it was coming. Pandemics and financial collapse are the two catastrophes that if we ever had an economic catastrophe, those are the two things that I was worried about. And fortunately, I paid attention a little bit sooner than most people. But if you think the stores are bad now, they're going to become worse now. No, going back to having cash on hand. I recommend that you have some cash on hand. Pay off your debt and then have cash on hand. You don't know that you're going to be able to always go to the bank and get money out. You just need to be able to have some cash on hand. That's important. Again, I would pay off debts, but only if I knew I could pay off something in the next month or two. And because if you can pay off a debt and stop having that $100 bill, for example, every single month, that's a big deal. Do that right away. Now, I want to go here, talk about cash flow assets. You need to take this very serious. If you want to build cash flow assets, the reason I like it is because if you buy Bitcoin may go up or down. You don't know, are you buying it at a good price right now? And so I always recommend dollar cost averaging in. But when you build cash flow assets, you're basically essentially building a business. All the companies that I recommend all pay you passive income totally for free for doing things like using web browsers, visiting websites, very simple things that you can do. And you can literally start earning a passive income very, very quickly. But the best part about it is you can tell anybody about it. Hey, you need to make some extra income. Hey, you want to start picking up your first cryptocurrency. They don't know about cryptocurrency. They're asking you a million questions about Bitcoin. How does it work? How do I get a wallet? Say, don't even worry about that. Go earn a little bit of Bitcoin first. When they start earning a little bit of Bitcoin, when they make their first $5, their first $10, their first $20, their first $50 in Bitcoin, they're going to ask you, what do I do with this? You're going to say, you withdraw it to your wallet. You're going to show them how to set up a wallet. All of a sudden, they're not going to worry about the mechanics of how it works. What is it? They just want to know how to get their money out. You're going to tell them, send it to a wallet. You're going to send them to a good wallet where they have access to their private keys. What's going to happen next? At some point, they're like, well, how can I spend this? You're going to teach them to send it to a Coinbase exchange. Now, all of a sudden, you didn't have to go through convince someone that Bitcoin was good technology. All you have to do is teach them how to earn it, and then all of a sudden they know it's good technology. The best part is you're able to introduce them, in what I teach, you're able to introduce them to a free way to start earning cryptocurrency, and it doesn't cost them nothing. And at the same time that they're earning free cryptocurrency, you basically earn a small royalty override on everything that they earn. Every company pays a little bit different, but there are several companies that do this, and it's incredible. And if you advertise for referrals and build a large referral base or affiliate base, some people are familiar with like affiliate marketing, similar thing. If you build a large affiliate base, you're literally able to start earning income that if the crap hits the fan, if you're making an extra $50 a month or an extra $100 a month, you're thankful. If you're making an extra $1,000 a month, that's even better. But you want to treat that like you're actually building a business. Now, if you have a lot of time at home, you're one of these non-essential employees, you're on lockdown, there's no better time. Do it right now, especially because we expect Bitcoin to go skyrocket in price potentially if all this uncertainty continues. Now, those are cash flow assets. When it comes to buying Bitcoin, here's my recommendation with Bitcoin. My recommendation is either use KuCoin, which is a centralized exchange, but if you buy small amounts of Bitcoin, they don't require KYC or AML. I'm not telling you, listen, understand me. I am not telling you to avoid paying taxes or try to avoid the government. That is not what I'm saying. But I do believe that privacy is a fundamental right for everyone, and they allow you to buy cryptocurrency in a transaction that is not easily tracked and is less likely to be able to attach your identity to it. Another option, and even a better option, is probably the BISC exchange. This is a true decentralized exchange where you don't have to worry about it's peer-to-peer server, meaning computer server to computer server, your computer to someone else's computer. It doesn't have to work. There's not like centralized servers to easily get shut down, et cetera, et cetera. So I would recommend either BISC or I recommend KuCoin. I do not recommend things like Binance, and I don't necessarily recommend Coinbase, to be very blunt with you, but you may have to use Coinbase, and I get it if you have to use Coinbase. But my recommendation is try to buy small amounts and try to do it in areas where there's no KYC or AML, if at all possible. Now, here it comes, buying gold. Why do I recommend people buy gold? Because it's just a form of diversity to protect your buying power. I want you to be able to protect your dollars because I fully believe that we are in a position. I had someone someone on Facebook said to me, please stop telling people that this means they're not going to be able to withdraw money from the bank. You absolutely will be able to withdraw money from the bank most likely, and I'll tell you why. Because the Federal Reserve is going to be able to print unlimited amounts of dollars. The issue is those dollars are not worth anything. Someone said, but doesn't FDIC insurance mean you'll be able to withdraw money? I was never trying to insinuate that you weren't going to be able to withdraw money. FDIC insurance only insures that you have $250,000 there. It doesn't ensure that $250,000 can continue to buy the same amount of things that it could buy now today. In the future, that $250,000 realistically might buy half as much. All of a sudden, what you would spend $250,000 today and buy, you would need $500,000 later. Or worse, you'd need $2 million later. Like there's no guarantee, but what gold does is it helps protect the buying power of your money. The same thing with Bitcoin. Bitcoin is probably going to go up in value. In fact, I think it could go way up in value. And I have a video called, Bitcoin to $1 million, kind of explaining why I think that. And by the way, I've been talking about the Federal Reserve and these monetary policies forever. This is the number one reason why I got into Bitcoin and cryptocurrency. But now more than ever, people need to own some Bitcoin. And same thing with gold. If you're going to buy gold, I recommend that you buy it locally. Buy it in like 1/10 of an ounce, or I don't know how much smaller you can get it, but 1/10 of an ounce is about, it's going to be 10% of the price of gold roughly as an ounce of gold, but it's in a much smaller amount. It's a more transactionable amount. It's easier to sell 1/10 of an ounce, much easier than it's going to be to sell, like a full ounce. It's easy to carry because it's about the size of a dime. I recommend you buy local and you pay in cash. And part of the reason to buy a small amount is because if you spend too much cash, then you have to fill out paperwork and all this stuff, and it's more trackable, traceable. Again, I'm not telling you to hide anything intentionally from the government. That's not what I'm telling you. But privacy is your fundamental right. You have a right to privacy. So if you pay with a debit card, for example, online, your ISP has the potential to know what you're buying. The person you're buying it from happens to know what you're buying, obviously, which is always going to be the case. Your credit card company has a right to know what you're buying, or has the ability to know what you're buying. Your banking institution has the ability to know what you're buying. It's just, and of course you know what you're buying. It's just not necessary for everybody to know everything that you're buying. So I recommend small amounts with cash, buy a little over time. Don't ever jump all in at once. Just buy a little bit over time. So quickly recap. The number one thing that I recommend above all else is that you have food and water and that you have yourself protected. Have a little bit of cash on hand. Make certain that your physical health and well-being is going to be covered. The third thing is cash flow assets, preferably cryptocurrency assets. And if you're able to get things like real estate, then I recommend real estate. And the reason I recommend real estate is because I believe that it's the most solid, even though you earn in US dollars, it's going to keep up with inflation, and you're going to, it's a hard asset that you're going to earn revenue on that asset above all else for the longest. It's the most stable cash flow asset. However, outside of that, I recommend cryptocurrency assets. Subscribe to the Crypto Passive Profits newsletter down in the description. Learn more about that. Stay tuned for my next video. Subscribe, hit the bell notification icon. After that, I recommend that you buy Bitcoin. Dollar cost average a little over time. You can buy it from anywhere, but I do recommend, protect your privacy. Use KuCoin, use BISC whenever possible. Also, gold. Pay in cash, buy it in cash, small amounts, 1/10 of an ounce, a little over time. Dollar cost average in. Don't go out and buy a ton of it. If you have any questions, by all means, please leave them down in the comments. Thank you so much for watching. Ladies and gentlemen, we are in rare times. There will be a lot of people that will go through pain and suffering, no question. But I promise you, not everybody will suffer together, and the pain will not be even for everyone. Now, you may be thinking, but I don't have a lot of money. I don't have, listen, do whatever you can to be able to earn an income. At the very least, if you're stuck at home and you have no other way to earn income, at the very least, subscribe to the free newsletter and start earning a little bit of cryptocurrency. You literally can earn, $5, $10, $20 of cryptocurrency without doing a whole lot for it. And then you can potentially parlay that into something more passive if you're diligent, if you're consistent, and you're willing to go to work and work at it. Now, if you're like, hey, listen, I've got some income coming in and I can grow something more substantially, and you can put, $25, $50, $100 a week into advertising, then you're going to be able to, over time, grow a much more serious passive cryptocurrency income. And we can talk about that more later. But thank you so much for watching. Stay tuned. Take care of yourself, ladies and gentlemen. Protect yourself. Protect your family. I oftentimes say, prepare for the best, expect the worst, and pray for the rest. Crypto equals freedom. Take care of yourself. Take care of your loved ones. I'm out.